Hi guys, Yami here, back with HYBE's Q2 financial report that was released today. Let's talk finance, shall we? Alright, so the first page is obviously the disclaimer, as always, just saying we're going to give you some information, but you can't rely on it. It wasn't audited. It's just us giving you the facts as we know them to the best of our ability. Don't sue us. Blah, blah, blah. Okay, so we have the contents. This new HYBE logo is growing on me. We believe in music. Cool. I wonder what it says here in Korean. Seems like it's a little bit longer than just we believe in music. Anyway. Alright. The goods. And as always, this information is in millions of won. So we gotta make some conversions here. Alright, so let's look at this first for the quarter. Q2 is going to be April through June of 20 through 21. Q1 is going to be January through March, as we discussed in our last video. They also have last year as a comparison. First, let's look at this quarter on its own. The total revenue that they earned converts to $244 million, which is a lot of money. And that is split between artist direct involvement and indirect involvement. Where's my trusty calculator? But okay, lots of math today. So anyway, if we just look at the revenue that they've earned, more of it is coming from artist indirect involvement than direct involvement, which makes complete sense that in a pandemic where you can not really have concerts and have limited performances, the majority of the money that the company is going to make is going to come from things like merchandise, things like licensing BTS's and other artists' likeness, creating content to be viewed, and fan club memberships. And that's exactly what we see here. In terms of indirect involvement, the majority of this came from content. What content did we have in Q2? Again, I'm thinking primarily of BTS, but off the top of my head, I can't think of anything. Yeah, let me know if you guys can think of anything for BTS or other artists that involved content, which would be any docu-series, any variety shows, anything where we had to pay to watch it, that would fall under content. And the second largest indirect involvement item that generated revenue was merchandise and licensing, which makes sense. And then, as expected, artist direct involvement items that generate revenue, like making albums and being paid for performances somewhere, or money that is paid to BTS for appearing in ads, or other artists. I'm honestly just gonna keep using BTS as my main point of reference because I do think that they still generate most of the money that is being made by HYBE, unless they've already started rolling up Ithaca into them. But despite that, I don't think there's much merchandising right now for Ithaca artists. There's really no fan club revenue. So if they were gonna be rolling stuff out from Ithaca, it would be albums and concerts, and that's still not very much money. But yeah, alright, so let's compare this to prior quarters. Compared to Q1 of the same year, we are making more revenue in total. Phenomenal. Alright, so last quarter, a bit more money was generated from indirect involvement than this quarter. And then comparing to the same time last year, so same quarter, Q2 of last year, they've grown tremendously. They've earned $107 million more year over year for the same quarter. So that's phenomenal. And then in terms of the breakdown in that quarter, this time last year, more money was made from indirect involvement than direct involvement. Still, the most amount of money people spent was either on albums, and in the indirect section, it was on merch. Yeah, I mean, merch continues to be a strong revenue source for HYBE, as it should. That is specifically their model. They have repeatedly told us that they want to create a company that is dependent on sources of income that don't require the artist to physically get up and go somewhere or squeeze out creativity. It's derivative content that can be made by other people utilizing concepts and ideas and music and appearances that BTS or other artists have done, so that there's less strain and stress on the artist to continuously generate new content and more of a spreading of the workload and creativity onto other people to create merch and content that we as the fans can enjoy and have our need, our thirst for our favorite artists quenched. If I was looking at this from the side and trying to think of ways that the company could grow their revenue source, I would potentially suggest the fan club as one place where they could maybe find a way to make more money off of it. But that being said, maybe they already have. Like, for example, if you think about it, what does the fan club membership do for you? Typically, the membership allows you to buy, like, have priority ticket purchase power. So like there's like, you get to order tickets a day ahead of everyone else, which is what I remember we did for the Once Upon a Time Map of the Soul tour. Like, we got to, people who had memberships got to order tickets a day ahead of everyone else, and we get access to specific merch. Sometimes there's raffles to maybe get on a Zoom call with BTS or maybe another artist. I don't know what the other artists are doing. But I also think that there's a ceiling right now to how much value we perceive that fan club membership to have. Right now, when I look in the Weaver store, the membership is like $20. And then if you want the merch packs, you pay like $150 to get them. If they started charging us $100 for the membership as it is right now, I think the majority of us would be like, hell no, that's way too expensive for like what we get out of buying this membership. Like, you have to reduce the price. It's not priced fairly. So one of the ways that HYBE could work on making ARMY or other fans willing to pay more money for a membership is by giving them more access to things, basically changing the value that we perceive that we get out of that membership. And I think one way that Weavers tried to do that was by saying that, hey, if you have those like membership merch packs that cost $150, you can get the physical copy of BTS's Weverse interviews. And I know a lot of us, myself included, were annoyed by that because I don't want to spend $150 on all this merch that I don't need simply because I want that magazine. So I think Weverse is trying to experiment with ways to see what we will be willing to spend more money on in terms of fan club related stuff, but I think they have yet to find a winning formula. And I say that because this is obviously the lowest moneymaker for them right now. It's a steady stream of income because there's plenty of us who are willing to spend $15, $20, $25 on an annual membership. But I think that's one place where they could work on creating more value for us. All right, in terms of operating expenses, went up in comparison to Q1, but we also generated a lot more revenue than Q1. Our revenue went up about $87 million, and our costs went up almost parallel to that at $83 million, which means that HYBE does not have inefficiencies in its merch making process, but I would say that they need to find ways to be more cost efficient in how they're selling merch. All right, and then in terms of their margins are not doing too hot. All right, so their operating profit is literally just their total revenue minus their operating expenses to get their profit. So basically, out of everything we do as a business to generate revenue, how much are we retaining in profit? The higher this number is, the better. And then margin is just this operating profit as a fraction over the total revenue. Like, as in, of the total revenue we made, how much of it did we keep? So in Q2 of last year, they got about 19% of that. I think that's good. But in Q1 of this year and now in Q2, the amount of money they're retaining is not as much. In this case, if you just look at the quarter over quarter, they've retained the same amount of profit, but they've made a lot more revenue. So they need to work on somehow improving this margin. They need to improve on reducing their costs, in my opinion. Yeah, I mean, I meant to look this up last time. Okay, so EY, my former employer, analyzed companies from 06 to 09 in media companies, and they say that lowest on the profit margin scale are companies that produce music with a typical profit margin of 9%. Publishing companies average about 20%. Electric game producers typically fall in the 11% range. Interactive media companies are 35%. I would say that presents an opportunity for Big Hit because they're trying to position themselves as not just a company that produces music, but a multimedia company that also is an IT, like an IT giant. So bottom line is that all media companies average, if you average them all together, you get about 23%. I think, me personally, as a random person on the internet with my financial background, what HYBE is probably trying to get to as a profit margin is something around 20%. Because right now, where they are is what is apparently healthy or what is considered normal as a profit margin for companies that produce music. I'm sure this report that I'm looking at is just for the US. Yeah. Anyway, all right. So I think in terms of margin, what HYBE is trying to probably focus on is improving their margin so that it's not as low as what it is now, which is apparently, from what I can glean off the goddamn internet, is normal for music companies that produce music. But the thing is that HYBE has positioned itself and promoted itself as a company that is not just a music making company. They also make mobile games. They make merch. They provide interactive experiences between the artists and the fans, such that concerts are supposed to be this huge event where you have a lot of vendors and collabs that they do to like learn Korean with BTS, with Tiny Tan, all of the art collabs they do with other artists who make fan art that you can buy that's officially merch and all of that. From based on what HYBE has said in all of their business press conferences, they probably want this to be like a 70-30 split, where 70% of their business, or at least 60 to 70% of their business is from indirect involvement of the artist. And 30 to 40% is the actual artist portion. So that the pressure to make money and sustain a company is not on the artist, it's on everyone else making derivative works based off of the artist's concepts, so that the art and the creativity is driven by the artist, but then filtered down through everyone else and utilizing other people's creativity. Anyway, that's my long-winded analysis of their business results. This is just my guess about what internally is going on at HYBE. Let's move on. This is where HYBE is celebrating their achievements with Weverse, which is the entity that is housing all of the artist indirect involvement revenue stuff. What they're trying to say here is that they had, as we mentioned in my last video, they'd had a slight growth into Q1, and now into Q2, they've risen 9%. Oh, I guess. So they're saying whatever they did between Q1 and Q2, they brought in a lot more monthly active users. And the active in that is important because only people who actively use the app are going to buy stuff, are going to engage in buying merch and content and the membership and all of that. What happened between Q1 and Q2? New fans, I would say, from artist releases, BTS's release of Butter and Permission to Dance, and I would say also Blackpink being added to the platform. But when was Blackpink added? No. Okay, Weverse, Blackpink wasn't added to Weverse until August. That's probably why we all got that glitch and got Blackpink notifications, but whatever. Anyway, yeah, that's what I'm gonna guess, unless anybody has any better guesses for why so many more users showed up on the platform. I'm betting it's based on artist releases. They attracted more new fans, and those new fans were like, hey, there's a platform called Weverse. Let me go check it out. So that's that. And then ARPPU is average revenue per paying user. So this is Weverse saying, hey, yeah, we attracted all of these people to the platform, and then we've provided them with the merch and the content that they wanted, that they were interested in, and that they were willing to spend money on, which means that we are, one, dialed into our fan bases and we understand what kind of content and merch they're looking for. And two, it means that there is potential for this platform to grow and become a bigger moneymaker. And, oh, this is a stupid comment. When was Mustard? BTS Mustard 21. Hang on a minute. Muster happened. Clearly they're not counting Muster as a concert. I think they're counting Muster as a content because it was something that we logged in and watched through Venue Live, their flagship concert streaming app. Yeah, okay, that's why I think the content amount is high. The revenue from content is high, because I think muster is being included here. Yeah, I think it's in content, because when we bought our tickets for muster, we bought them through Weverse. And that means it increased the average revenue per paying user, because all of us who bought our tickets through Weverse immediately made that go up. So I think that's what this is. I think this right here, this went up because of muster. All right, moving on. This is them just formally announcing that Bing PD is no longer both the chairman and the CEO. He is now just the chairman. So that means he's still on top. And if you guys have watched my other Army finance videos on HYBE, then you know that he's still the one in charge. And to be honest, I think it's better this way, because when you are both, you have to be in control and manage the entire company. And then you also have to answer to your board of directors and present all the information and deal with the logistics of what they want and help guide how the conversations should go about growing the company. It's a hot mess. And that's literally what they're saying. They made these changes to strengthen management transparency and soundness through separation of chairman and CEO positions. It's less work for Bing PD and it just makes more sense logistically for a growing, massive company like HYBE. And then the other big change that we can see from this is that it looks like Scooter Braun has been nominated, or has now become the well, what this is showing here is that they're trying to say that, yeah, while Lenzo Yoon, my baby, is in charge of HYBE America, because HYBE America was a merger between HYBE America and Ithaca Holdings, Scooter Braun is retaining his CEO position over Ithaca Holdings. So between the two of them, they're managing the entire company of HYBE America. And what this comment is saying is that they did it to establish region-focused management that would understand and focus on their region to bolster global business capacity. Yeah, this just goes back to what I think is happening, is that they're trying to leverage Scooter Braun's understanding of the American music market, the logistics of growing a company here, which would be a hybrid between a record label, a merch manufacturer, a fan base, a production agency, like a talent agency, and like in-house producer place. I don't know what you call that, which is something that is new and doesn't necessarily have an existing example in America. So HYBE is utilizing his understanding of the American market and how the fuck to get this done by keeping him in this position of control. And plus he knows his own fucking company, Ithaca, so he can still manage that. Why would HYBE take on the role of managing his goddamn company when he's still around and can manage it himself? But yeah, and then they're trying to be clear that they're also pushing in HYBE Japan. And I don't really know anything about this dude, but they seem to be doing well in Japan. So I would say they made a good choice here. And then the CEO for HYBE is Park Ji-won. So yeah, so they're highlighting here exactly what their focus is. Their focus is on the two largest music markets in the world, America and Japan. They are punching through full steam ahead into both music markets, into both countries, into both industries, and they're laying muscle into it. Cool. What is this? So they're trying to say, like, yeah, we're focusing on those two markets, or those markets in specific. And here's how great our artists are. 4 songs on Billboard Hot 100 by HYBE artists, including 10 straight weeks on top of the chart by BTS. Yeah, flex. Obviously, HYBE is very proud of the fact that BTS is on here with Permission to Dance and Butter. It's very fucking proud of that. And what they're also proud is they're taking ownership of the artists that were formerly under Ithaca and saying they're HYBE artists now. So Justin Bieber, Ariana Grande, those are ours. We've acquired other charting Billboard Hot 100 artists, and we're doing fucking well. And by the way, our other flagship artist that we created from scratch, Tomorrow by Together, TXT, good God, whatever. That they've also been on the Billboard 200 for 8 straight weeks and haven't come off, which means that they have also established a presence in the American market, which is phenomenal, because basically what HYBE is showing here is that their plan to make a company that is driven by artist indirect involvement, revenue generating items like merch and content is dependent on Weverse. And Weverse is doing phenomenal. And Weverse is driven by great artists that are popular. And so here they're saying, and look at how popular our artists are. We are moving in the right direction. Our business model, our business strategy is working. This is Japanese charts. So 3 BTS songs on the top 3 spots for 2 straight weeks on Oricon streaming chart, which is the equivalent of Billboard in Japan. And then they're also talking about how 17, Tomorrow by Together, and HYBE also positioning high on album and streaming charts. Basically, HYBE again is saying like, hey, remember we said we're going to focus on America and Japan? Look how fucking great we're doing in America and how fucking great we're doing in Japan. I'm so proud of them. This is amazing. So this is the same thing we were looking at, but now instead of just looking at revenue and cost of sales, which we looked at above, let's look at SG&A. SG&A is just overhead costs. It's the money that the company has to spend regardless of what merch they're making, what albums they're producing, all of that stuff. This can make or break a company. So this is Q2, Q3, Q4 of last year, and then Q1 and Q2 of this year. So in terms of the money they were spending on payroll, they hired a bunch of people through Q4, and then they had a dip here. They fired people? Unclear. And then they're back to their normal levels. Sorry, this is fucking tiny. Logistics costs. I would think this would be the cost of storing things, because they have a lot of concert equipment, outfits. Good God, I don't know what else they would have, but maybe this would be the cost of storing them someplace. This would be the cost of transportation, like flights, cars, buses, hotels, meals for traveling artists. Like, I think this is just the cost of moving people and equipment around between places. Depreciation and amortization, if they had big equipment, that would have to be depreciated over time, like concert equipment. Everything that you see on stage at a BTS concert, the speakers, the sound equipment, the lights, all of that stuff. You could have furniture, but furniture is not going to be that expensive. Well, I take that back. If you have to furnish a whole HYBE building, that would get expensive, and you have to depreciate all of that furniture. Cars would depreciate if you have a lot of cars that you own. I think maybe this is furnishing the new HYBE building, and maybe they've started purchasing equipment for future concerts. Rent has gone up and has been constant now that they have their new HYBE building. That's fine. And then here's their operating margin again. It's low, but apparently this is the industry norm, but I wouldn't be happy with this margin if I was them. I think this is what they're working on. Then everything else here is not very interesting for you guys. As I've mentioned before, quarterly earnings reports are frustratingly vague on purpose, because they're giving you information and they're trying really hard not to say anything that could be used against them. And they're trying not to reveal their business strategy too much so that other companies copy them. But basically, they're just trying to show in this that they're on the right track. Their business model and their business strategy has resulted in them actually being successful and making more money and continuing to grow and continuing to expand. And everything that they took a risk on, like Weverse, like buying Ithaca, like expanding their business and putting more of an emphasis on indirect artist involvement, revenue generating items, was all a risk, and everything that they've done has just paid off. So I think they're all pretty much patting themselves on the back over there. So yeah, that's it. See you next time, guys.